Welcome to the 30-Day Financial Challenge, focused on taking control of your credit score. In this video, we will walk through a practical, step-by-step plan you can start today. Your credit score influences interest rates, insurance costs, and even housing access. Over the next several minutes, we will give you a clear roadmap, tools, and checkpoints. Let's begin. Here is our agenda. First, we will cover why your credit score matters. Next, we will outline the 30-day roadmap. Then we will walk through each step. Pulling your free reports, freezing your credit, getting your score for free, disputing errors, understanding the 740 threshold, and opting out of junk mail. After that, we will provide global guidance and the success criteria, followed by quick quizzes to reinforce learning. Let's move forward. Disclaimer: this video is for educational purposes only and is not financial or legal advice. Always verify requirements and procedures for your jurisdiction. Answer identity verification questions truthfully. If none of the presented options apply to you, then selecting none of the above may be appropriate, but do not guess. When in doubt, contact the Bureau directly. Proceed carefully. Your credit score affects your interest rates on loans and credit cards, your insurance premiums, and even your ability to rent housing. Therefore, improving your score is a high return on investment activity. In short, it can reduce borrowing costs and open doors. With that in mind, let's overview the 30-day plan. Here's the 30-day overview. On day 1, pull your first credit report. During days 1 and 2, freeze your credit at all 3 bureaus. On day 3, get your score using a free method. From days 4 through 7, audit your reports and dispute any errors. On day 8, opt out of pre-approved credit mailers. On day 9, set a repeating reminder every 4 months to pull a new bureau's report. Finally, from days 10 through 30, follow up on disputes and maintain good habits. Now, let's start with Step 1. Step 1 is to pull your credit report at annualcreditreport.com. It is the official source for free reports. Do not pull all 3 at once. Instead, pull one today and set calendar alerts to pull the next reports in 4 months and 8 months, respectively. Review all personal information, accounts, balances, and inquiries. If identity verification questions mention loans or addresses you do not recognize, answer truthfully. If none of the options apply to you, selecting none of the above may be correct. Never guess. If you are unsure, contact the Bureau for support. Next, we will freeze your credit. Next, freeze your credit with Equifax, Experian, and TransUnion. A freeze prevents new accounts from being opened in your name without your authorization. This is the strongest defense against identity theft, and it is more protective than monitoring alone. You will receive a PIN or key for each bureau. Store these securely in a password manager. If you need to apply for credit, you can temporarily lift the freeze and then reapply it. Now let's compare freezing with monitoring to clarify the difference. Freezing credit blocks new credit lines and is free by law in the United States. It requires a PIN to lift and is the best defense against new account fraud. Monitoring, by contrast, alerts you after changes occur and may cost money. It does not block applications. It simply notifies you. Monitoring can be a helpful secondary layer, but should not replace a freeze. Therefore, prioritize freezing and consider monitoring as supplementary. For Step 3, get your score using free sources. Many credit cards and banks offer a free FICO or Vantage score. You can also use reputable free platforms for score estimates. Do not pay for scores unless you are preparing for a major application like a mortgage. Be mindful of the scoring model and version displayed. Track trends over time rather than reacting to small daily changes. Next, let's examine what drives your score so you can focus your efforts. Here are the approximate FICO factors. Payment history at about 35%. Amounts owed and utilization at about 30%. Length of credit history at about 15%. New credit at about 10%. And credit mix at about 10%. To act on these, always pay on time. Keep utilization low, ideally below 10 to 30%. Avoid closing your oldest accounts. Limit new hard inquiries. And maintain a responsible mix of accounts only when it actually serves a need. With that context in place, let's talk about disputing errors. When you find errors, audit all personal details, accounts, balances, limits, and inquiries. Collect evidence such as statements, identification, or fraud affidavits where applicable. File a dispute through the relevant bureau's portal. Investigations typically take up to 30 to 45 days. Set reminders to follow up. If the issue is not corrected, escalate to the Consumer Financial Protection Bureau or send a certified letter with documentation. Now, let's address the 740 threshold. A score of around 740 or higher usually qualifies you for prime rates. Beyond 740, incremental increases often produce minimal financial benefit. Therefore, focus on major levers, perfect payment history, and low utilization. Set autopay for at least minimum payments and, when possible, pay statement balances early to keep utilization low when statements close. Next, let's reduce identity theft risk and clutter by opting out of junk mail. Next, opt out of pre-approved credit mailers at optoutprescreen.com. Choose electronic opt-out for 5 years or submit the permanent mail-in form. Complete any required email or mail confirmations. Shred sensitive mail and secure your mailbox to reduce the risk of mail theft leading to identity fraud. Now, let's address guidance for viewers outside the United States. For viewers outside the United States, research your country's credit reporting system, identify the major bureaus, learn how to access your credit history, and understand your rights to dispute inaccuracies, and freeze or lock files where available. Use official government resources and consumer protection agencies to guide your actions. Next, let's solidify your monthly goals with clear success criteria. Your success criteria are to complete any 3 of the following this month: request at least 1 credit report, set a 4-month reminder to stagger reports, obtain your score for free, sign up for credit monitoring as an optional add-on, opt out of junk mail, or initiate at least 1 dispute if you found an error. Meeting any 3 will move you meaningfully forward. Now, let's check your understanding with a quick quiz. Quiz time. What is the single strongest defense against identity theft involving new credit lines? Option A, paying for credit monitoring. Option B, freezing your credit with all bureaus. Option C, checking your score daily. Option D, closing all your credit cards. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is freezing your credit with all bureaus. A freeze stops new credit lines from being opened in your name, which is why it is the strongest defense against identity theft related to new accounts. Monitoring only alerts you after changes occur. Next question. If your score is already above approximately 740, which action is least likely to save you meaningful money? Option A, maintaining on-time payments and low utilization. Option B, freezing your credit to prevent new account fraud. Option C, spending money to raise your score from 760 to 800. Option D, opting out of junk mail to reduce identity theft risk. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is spending money to raise your score from 760 to 800. After approximately 740, the benefits of further increases often diminish. You will get better value from maintaining perfect payment history, keeping utilization low, freezing your credit, and reducing identity theft risk. Here are quick links: Equifax freeze, Experian freeze, TransUnion freeze, opt-out pre-screen for U.S. opt-out, and annual credit report for official free reports. Use the official portals only, and verify URLs carefully to avoid phishing. Next, let's map your month with a simple Gantt plan. This Gantt-style schedule shows how to sequence your month. Complete report pulling and score checking early. Freeze your credit at each bureau over day 1 and 2. Conduct audits and disputes during days 4 through 7. Opt out on day 8, and set 4-month reminders on day 9. Maintain a simple action log, store confirmations, and schedule follow-ups to stay on track. Before we wrap, let's include a quick Markdown cheat sheet you can screenshot. Here is a quick checklist in Markdown style you can reference. Pull 1 report today, freeze with all 3 bureaus, get your score for free, audit and dispute errors, opt out of junk mail, and set 4-month reminders. This condensed list supports quick action. Now, let's summarize key takeaways. To summarize, act now by pulling 1 report and freezing your credit. Focus on perfect payment history and low utilization. Remember that around 740 is the sweet spot, so do not overspend chasing small increases. Finally, Complete any 3 of the success criteria this month to lock in progress. Let's close out. Thank you for watching. If this challenge helped, please like the video, share it with a friend who needs it, and subscribe for more content. Share your action plan and questions in the comments so we can support each other. See you next time.